Hello everyone, this is the daily forecast on euro dollar. Today is September 16th, Thursday. This video is brought to you by Finteria Markets. Please visit our website to learn more about the company, services and tools that we offer. As usually, I'm going to start with winners and losers. That can help us to see what are the strongest and the weakest currencies in the market right now. So let's check the situation over the last 24 hours. We can see that the Canadian dollar gained 0.23%, generally supported by higher oil prices, and the inflation report that showed that prices are accelerating. We can see also some positive performance behind the New Zealand dollar, and we also had a really positive GDP data. This is generally old news, but anyway, it provided some support to the New Zealand dollar. And as we can also see, the Swiss franc is the loser of the day. It lost 0.2%. And the US dollar was also weak overall. The euro remained pretty much neutral. And generally, we can say the market was not that volatile, still feels like August, lots of false movements, low volatility, nothing actually interesting happening at the moment. So if we check the weekly charts, here we also see the volatilities are low, no any currency surpassing 1%. So the Japanese yen still outperforming. And we can see the British pound still keeps the second position. And I actually expect myself that it might remain one of the strongest currencies. The Australian dollar is still the weakest currency. It didn't change much from yesterday. So let's have a look at the economic calendar. First of all, just a few comments about the news we had yesterday on Wednesday. So we had pretty strong inflation data from UK, as you can see, according to the chart. Well, this chart doesn't include the latest release. So the inflation was expected at 2.9, came at 3.2. This is all supporting, really supporting the future interest rate hike. So the monthly value was also pretty high, 0.7%. So the output inflations are all much higher. Same situation in Canada, inflation is much higher. And finally, we had some industrial production data coming from Eurozone, which came softer, and the same situation in the US. The inflation, the industrial production was slightly weaker than it was expected. Well, we can say that this could be mainly related to supply chain constraints. So let's now switch to the charts. Maybe before I'm going to switch to the charts, I'm going to show you once again a few charts from the stock market. We actually have negative dynamics in Asia right now. Nikkei is down almost 1%. Hong Kong is down 2%. China is also negative. So if we look at the charts, just to remind you that here we had some correction till the support line. This is S&P index and it rebounded yesterday, but let's keep an eye what will be happening next in case if there's going to be a breakout, a much deeper correction may occur. So yeah, just looking at the dynamics, I want to show you Hong Kong, and you see that we broke the support level. Looks ugly here. So this is mainly related to some other issues. It's mainly to China and all the investigation cracks that are happening in China. Anyways, this is the Shanghai index. It's going into correction phase. I think the rest looks more or less neutral, including DAX and other indices. The only market that grew is the Australian dollar. So, but anyway, keep an eye on this because there can be some risk aversion happening today. You can use the tool market info FX risk aversion. Here you see that the overall value is pretty neutral. If it's above 80, it means there is a risk aversion, and there is no risk aversion on the daily chart. It's 30%, but on the latest time frames, 1 hour and 4 hour, we can see some sort of risk aversion happening at the moment. And if you will go back to winners and losers, and you will switch to 4 hours, for example, here you will see outperformance of safe haven currencies, Swiss franc, US dollar, Japanese yen, and underperformance of the commodity currencies, New Zealand dollar, Australian dollar, and Canadian dollar. So let's now have a look at the charts. I'm going to start with the daily chart as usual. Let me switch. Once again, situation didn't change much. It was sort of an inner candle within the previous ranges, just sitting at 1810, not doing really much. Really boring markets at the moment. And here, if we switch to an hourly time frame, once again, I do not see anything interesting. We're stuck in the neutral area. And I would generally say that we need to have a clear breakout of 1850 or 1780, or potential. Ideally, it would be better to go below 1770. So, but what can potentially be a trigger? That's a main question. I guess next week we have more events that can potentially move the markets much more stronger, but it can also happen because of other events happening in the markets, like a stock market correction or other news coming. So keep an eye on the technical levels and what's happening. At the moment, I think that the staying flat is probably the safest position, or you can also look at opportunities on some other currency pairs. So that's it for today. I hope you like this video. Please leave your comments and questions if you have any. Subscribe to the channel in order not to miss the following videos, and check our website and all the tools and services that we offer. Thank you for watching.